Hey guys, hope you are all having a great day. Though there weren't a lot of news directly related to AMC or GME, we still have a lot of developments take place. Today we are talking about hedge funds, see which ones are shorting our beloved stocks the most and which ones are not doing so well. We are also going to quickly talk about China's instability, quickly go over general market sentiment. I am going to quickly go over each respective segment and Tokyo drift right through it all so as to make it easy and quick for you. I want to thank everyone that has shown up to my morning videos. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Let's quickly begin with Evergrande. China has been having serious problems with their real estate developers as of late, and today news came out that the situation has somehow gotten a bit worse. Construction partners are going to be struggling to pay annual bonuses to workers worth at least $170 billion, which increases the risk for social instability in the overall nation. These deferred wages are due on January before the lunar year ends on January, and represent the majority of migrant workers' annual earnings. To make matters even more dire, you know how we have talked about local governments taking action to help some of the failing developers. Well, they have been doing a pretty bad job at that. They have been tightening developer grips on pre-sale funds held in escrow accounts because they feared that developers will divert funds to other provinces in order to pay their debts. The collective actions of local governments are equivalent to a credit crunch for the entire property sector, even if each of these local governments' rationale is to step up its monitoring of pre-sale funds. There is serious trouble with the financial squeeze China is seeing, and industries will intensify it as the value of their offshore bonds mature in the first and second quarter of next year, which would double the total from the current months. To give you some perspective and numbers, the amount will rise from the $10.2 billion this quarter all the way to $19.8 billion in the first quarter and then $18.5 billion during the second quarter. Already new home sales have halved from a year ago, and developers are faced with a crisis that they themselves cannot do anything to avoid or control. Analysts have agreed that the measures taken by Beijing to ease measures on the real estate sector have helped, but it is a temporary resolve, and that the worst is yet to come for the economy in general and the property sector in particular. A lot of people don't take what is happening with China serious, and it is eerily similar to what happened in 2008 before everything fell apart. Don't sleep on news regarding their property developers, because depending on the magnitude of a crash, we could easily find ourselves rocketing off on Lambo rockets to the moon. Let's talk about hedge funds. We know all the main players already, and we know that a great portion of hedge funds hold insurmountable positions betting against GameStop, along other meme stocks as well. The Street released a great article showing bringing attention to the top 3 hedge funds that currently have the biggest positions against GameStop. Keep in mind, these are the hedge funds that have publicized positions against GameStop, and that we know some market makers and banks have much larger positions that would make the numbers we are about to talk about seem fractional. With that said, let's go over the clowns with a death wish. The third on the list is Hound Partners, which have around $3.2 billion in assets for 13 clients. They currently hold around 209,100 put options on GameStop shares, which account for nearly 2% of their entire portfolio. Since entering their short position during the first quarter of this year, Hound Partners have liquidated 28,800 put options from their original position, which was 237,900 put options. Their biggest positions lie in some S&P 500 ETFs and blue-chip stocks like Microsoft. Coming in second place for public put positions is Twin Tree Management, which has $3.8 billion worth of assets under management. They started their bet against GameStop during the third quarter of this year, with 253,700 put options on GME. The market value of this position lies around $44.5 million, representing a small portion of less than 1% of Twin Tree's assets. Interestingly enough, Twin Tree has nearly 20% of their portfolio holding bets against major ETFs. Maybe they also hold the opinion that everything is going to fall and that we have entered a bear market. And number 1 is Prelude Capital Management. The New York-based hedge fund has 9 clients and runs $8.1 billion in assets under management. They have a short-selling bias, and have puts in big companies like SPDR, and P500 and even Tesla. Prelude Capital has 2% of their entire portfolio holding puts against GameStop, which accounts for 469,000 put options total with a market value of $82 million. The company has liquidated 308,200 GameStop put options since it first opened positions during the second quarter of 2019. All these three hedge funds better cash out while in the money unless they have a death wish. MOIS is coming and it will not take pity on anyone shorting it. Funny enough, hedge fund veteran Patrik Brummer is looking to hire new traders after having record losses. The 72-year-old Swede is hoping to get in some equity trader talent as a means to avoid a repetition of the unprecedented losses he suffered this year. His fund, Brummer Multi-Strategy, lost 0.4% in 2021 while their benchmark index returned 7.4% over the same period. With their lackluster performance, he wants his firm to prioritize specialists within certain parts of the market, in terms of geography and sectors. Their appeal lies in the narrower range of mandates and the independence afforded to fund managers, which are small but important different that set it apart from the likes of Millennium Management and Citadel Securities. Looking ahead for what lies in his future, the Brummer said he has no plans to sell his business or seek an initial public offering. The thought of being listed would be a huge distraction for him. His goals are prioritized in creating conditions for an external life for the company. Brummer said he expects the flagship BMS portfolio to be more liquid and better equipped to meet the more complex market environment that has gradually evolved in the past few years. Whatever comes to him, if he wants to keep those losses small and minimum, he better wrinkle up and not take short positions on meme stocks either. If he was smart, he would start buying some GME and AMC right now before they bounce back strong from these crappy market conditions. Lastly, stocks climbed today for their second day in a row after strong economic data helped ease investors' concerns about the risk that the new variant imposes. Investors have been worried about the spread of Omicron, which threatens economic recovery. They now welcomed fresh data that showed consumers are more confident than anticipated about all the prospects for the month of December. With that said, let's now talk about today. The Fed submitted over $1.699 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 60% of the total volume today, while dark pool trades for GameStop accounted for 41% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 5% for the day. It began trading fairly neutral during the pre-market. It traded along the VWAP up until the market opened. Once markets opened, AMC started breaking support, falling further and further. It found stronger than anticipated support at 28.75, but ultimately fell below the lower band of VWAP as shorters wanted to exploit weaknesses. AMC would reach as low as 28.04 before bouncing up and closing at 26.68, below the VWAP. As for what to expect for tomorrow, AMC will have support at 28, 26.92 and 26.22. Resistance will be met at 29, 30.13 and 30.50. We are not looking good today and momentum favors shorters. I think tomorrow they could get cute and perhaps try to break us below 25. We have to try to end above 30, which is where the real battle will be for option traders. Keep in mind that the stock market will be closed on Friday, so I expect a fair amount of volatility. GameStop traded bearishly, losing 2% for the day. It opened trading pretty neutral. GameStop would eventually get small short attacks that would take it down to the lower band of the VWAP. After a small bounce, GameStop was able to break above the VWAP, but not really build on top of it. After attempting to break above 158.65 twice, GameStop failed to move upwards and instead broke support, eventually reaching 152. It would bounce back a bit and close at 154.00, below the VWAP. As for what to expect for tomorrow, GME should find support at 152, 150 and 146.79. Resistance will be met at 155.60, 160 and 164. GameStop started trading pretty neutral but ultimately fell off. It is clear to me more than even shorters want this monster as far from 160 as possible, and the fact we ended the day at 154 shows they are getting overconfident and want us below 155 tomorrow, so let's hit them where it hurts and slap that buy button. That is all I have for you guys today. Thank you all for watching my video. I will link this morning's video on the comments below in case you missed it. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day and to the moon.